and extremely excited about the ongoing innovation that is occurring in the insurance industry. Today's topic will center around the underwriter and how underwriting is evolving. I look forward to talking this through with our panelists today. I want to very briefly introduce them. We're joined by Dean LaPierre, Chief Underwriting Officer of Berkshire Hathaway Specialty Insurance, Chris Donahue, Chief Underwriting Officer, Hippo Insurance, and Ben Huckel, CEO, Send Technology Solutions. Gentlemen, thank you for joining me today. I look forward to diving in here, but before we do, I want to allow each of you to more formally introduce yourselves and share a little bit about your passion around today's topic. Dean, if you don't mind, I'll let you go first.
Yes, thank you, Michael, and thank you for the invite to participate in this webinar. It's a subject that I hold near and dear to my heart. My role here at Berkshire Hathaway Specialty, I'm the Chief Underwriting Officer for the property and marine lines globally. So, I interact with a lot of different underwriters in a lot of different jurisdictions who hold a lot of varying levels of experience and expertise. So my job is alignment of underwriting discipline, underwriting thought process, and underwriting development. So I'm involved in all aspects of that, from training our new underwriters to working through complex risks with our most seasoned underwriters across the globe. So that's where my passions lie.
Thanks, Dean. Chris.
Great. Thanks, Michael. Thanks for having me. I'm Chief Underwriting Officer at Hippo. I've been doing underwriting now for 27 years, which is hard to believe. And during that time, I've worked for large insurers, and most recently over the last year and a half been working at Hippo, where our mission is to protect the joy of home ownership. And what really attracted me to this position is our focus on mitigation and modernizing the homeowners purchasing experience and customer experience. So it's been an exciting year and a half with Hippo, and I look forward to discussing some of the innovation we're going about.
Same, Chris. And Ben.
Hi. So I guess my passion was always technology, and I spent quite a lot of time working with different some of the big SIs across the globe, and then I think I moved into insurance, actually general insurance, maybe 17 odd years ago, and I've been in commercial insurance for about the last 13. But really, I guess the passion of marrying those two together, a heady mix, but the opportunity to leverage the capabilities that technology can provide, and specifically some of the challenges that what I would call kind of digital first organizations, or organizations that want to move towards a digital first view of the world, is where we specialize, and it's where my passion lies in setting up partnerships with those sorts of organizations to help them achieve that transformation to become a digital first organization.
Excellent. Thanks, Ben. So we'll dive right in. Before we do, to our audience on Bright Talk, the presenting platform that we're on today, there is a question mark icon where you can share questions with our panelists at any time. I want to encourage you to do so if you're interested in getting involved in today's discussion. I'll be on the lookout for any questions that we can squeeze into today's agenda. So I just wanted to make sure that our audience watching knew that your participation is highly encouraged. So let's dive in here. My first question to get us started is, I'd like to break down this concept of the Bionic Underwriter and better understand what it means from your perspective. Where's the truth? Where are the high level fallacies, if you see any? And how in general is the art of underwriting and being an underwriter actually evolving, in your opinion? Dean, I'm going to bring this one back to you first.
Yeah, Michael, thank you. It's a great topic, and when we were kind of joking about it during our rehearsal about, I wonder how many people in our audience actually remember the Bionic Man TV series back in the 70s with Lee Majors and Colonel Steve Austin and all that. What a Bionic Underwriter is an interesting term. So, my God, I'm sorry. From a standpoint of underwriting, I think my point with that subject is there are things that machines are good at, and there are things that people are good at. And, it's really the intersection of the two that is the most interesting space for me. And people forget that Steve Austin was a pretty much a stud pilot before he became Bionic, right? So he already had a tremendous amount of talent and a tremendous amount of skill. And then he became Bionic, right? I guess the analogy is he used technology to become bigger, stronger, faster, better than he was. Right, so, and I think that's in essence what we're talking about here is, how much technology can make us bigger, faster, better, stronger than we were. But the key point is you've got to be that pilot first, right? I mean, Steve Austin was that pilot first. First of all, you need to be trained and be pretty good at what you do, and to leverage what technology can do for you. I think a mistake that a lot of young underwriters make is feeling that technology will actually do everything. That's a robot. That's not a bionic man. And robots have their place in some more, in certain lines and certain things and certain routine automation tasks. But when you talk about the art of underwriting, Michael, you referenced the art of underwriting. That's very much something that is something that people have to get good at, and then start leveraging the idea of, can technology make me bigger, faster, better, stronger?
I totally agree. And also, I think we're all very lucky that your depth of knowledge of Steve Austin and the $60 million man or $6 million man is here alongside us for today's topic. Chris, curious, how do you see this application of Bionic? And what's really realistic from your perspective about that phrasing?
First, I want to say thank you, Dean, for bringing me back to the 1970s. I used to do a mean Steve Austin impersonation for my family. It's interesting to juxtapose Dean's business, where he's dealing with complex risks on a regular basis, with the homeowner's business, where it's generally homogeneous risks, that they're very similar. And I think the immediate thought is, technology comes in and replaces the human element. But I think it's important that we remember that we're an Insurtech, right? We aren't just a technology company, but we still have to do the basic blocking and tackling of generating an underwriting profit. And now we want to profitably grow this book of business. And it's a mixture. I agree with Dean wholeheartely. The balance may differ by your line of business, but at the end of the day, both from an underwriting perspective, where we judge risks, we can leverage technology to make that easier, to present things quicker to us, to make sure that we're looking at the right business and making the right decisions. But at the end of the day, our agents and our customers expect that there ultimately is a human somewhere within the business helping them get the right insurance, getting the right coverages, making the right choices. And are guiding them through the lifetime. One of the things about owning a home is that it doesn't come with an owner's manual. It's probably the most complex thing you will ever buy in your life. And my razor comes with an owner's manual, my electric razor for my hair, but my home doesn't. We're there to help that. And that's the human on the other end of that phone. As we provide Hippo home care to our clients, they have a person that they can contact, and all of this is important in the underwriting process. So to me, I agree with Dean wholeheartedly that there's a customer service and art to this transaction. We always want to keep the human element in there. We just want to make them really efficient and really effective with the use of technology and data sources.
Ben, your perspective is going to be really interesting because Send is arming these underwriters. And so when they turn to opportunities to bolster their capabilities, working with someone like Send would be a partner in turning them into somewhat of a bionic underwriter. So what are your thoughts on this?
Well, I think it's exactly where we come from, really. I mean, I think we always talk in two terms, the art and the science of underwriting. And I think when you get down to it, and funny enough, I was at a conference where the art of underwriting was described as acquired by osmosis, where really there aren't any manuals to read. It's a very, very It's one of those processes that takes time, and really you only get that art of underwriting. You understand the craft of underwriting through exposure to it. Now, I think where we've transitioned and where we've changed is to start to say, well, look, if you can actually base that art on science, then that gives you kind of your bionic capability, and some of the tools and technology that you can get within the marketplace now are specifically designed to help you achieve that. And I think we started to look at how you plumb all of that capability together, but not just this idea of using technology for technology's sake. I think you have to be quite cute and clever about the areas that you adopt technology and what you're actually trying to achieve. So if I take one example, which is artificial intelligence, I think you quite often see companies throw that at problems with the expectation that the robot and the computer will work it all out. The reality is that we kind of switch those letters the other way around. So we use artificial intelligence as an intelligent assistant, but fundamentally the underwriter, and I totally agree with Dean and Chris here, is the underwriter's the person in the loop. They're the one who's actually manipulating their craft, but they're doing so on a data set that has been interpreted, extrapolated. It's the right information at the right time, and probably more importantly, the prevalence of data within the environment today. I mean, there's so much data. Actually trying to drill into it and get the right data at the right time is really, really difficult. And I think you'll only see that increase because data is probably more abundant than it's ever been, and everyone's trying to get their hands on it, but it's really, really difficult to actually get that at the right place at the right time. And that's where we've started to drill down and start to specialize, because if you can start to provide that information within those confines, then actually you can start to make really, really intelligent decisions, and your art and your craft of underwriting gets better because you're basing it on empirical data. Actually, you've got data to sort of drive those decisions.
Yeah, absolutely. I want to talk about, so technology could impact several different elements of underwriting in terms of potential gains, be it speed, efficiency, accuracy, profitability, security, growth, etc. So I'm curious for each of your opinions on where you're seeing tangible results among these desired deliverables, and are any of them more attainable than others at the moment? So Ben, let me bring that one back to you. I'm curious for your thoughts.
Yeah, so I think the first thing I'd like to say is I think some of those are outputs of what I would say some of the others are inputs, and I think if you can start to get a handle on things like data quality and the speed with which you can get data, then it can directly affect your growth and the decisions you make about your portfolio overall. And actually, if you can start to pull data out of siloed constructs, then actually you can start to report across it. Your MI gets better, your analytics get better. I guess where we see some of the key challenges that we look to address within the technology space was about how do you, for example, process and I use the example of property. How do you process 200,000 line spreadsheet of properties? How do you geolocate them? How do you enhance that information? How do you provide that information back to the underwriter in what we call near real time? A lot of the organizations that we deal with, they might send that off to an offshore team. It will come back 4 weeks later, 5 weeks, 6 weeks later, and typically then the risk is already underwritten, and there's an activity to go through which says, well, how much reinsurance do I need to buy because I didn't really understand the exposure when I actually underwrote this risk. And I think if you take that information, you can apply it across lots of different business lines. In the marine space, for Dean, I'm sure getting vessel information at the right time is going to be a fundamental part of what you would really love to be able to do. But you want that information presented in the right way so that it can actually underpin the decisions that you need to make. So I think that there are elements which go in which will directly cause growth, will directly cause you to understand how you can achieve that growth. And what you really want to be able to say is, hey, I got 5% growth last year because, And quite often within organizations, it's the because that's the really difficult question, because you don't understand what you've let go. You don't understand where your individual growth areas are, and you don't understand where you've lost money. So if you can get a handle on that, then a lot of the other capabilities sort of get driven out the back of that. And the last thing that I'll mention, and I will shut up after this, is really kind of holding on to underwriters and attracting underwriters is of paramount importance to organizations, because what you want to be able to do, and this goes across any industry, you want to be able to attract the best talent. So if you've got the right tools and the right capability that allows them to really practice the art of underwriting, i.e. focus on that underwriting capability to drive real growth and capability and support the overall portfolio direction of the organization, then you're in business.
Mm-hmm. Chris, where do you see the most tangible changes in underwriting?
So I think, the objective of underwriting and the objective as an insurance enterprise hasn't changed, right? The way that we've gone about business has. So the goal still is profitable growth. Like that, out of all the things that you have listed there, you both want to A, run a profit, B, continue to grow your business and grow value in your organization. So I think really that comes down to, how can we be competitive in the marketplace for risks where we adequately price and adequately rate the risk? And really the value proposition there is three things. Like, you've got to be competitive in price. Doesn't necessarily mean you need to be the cheapest in the market, but you have to provide value, and you have to do that in an easy way. And I think the technology that we're bringing to bear affects each one of those. So on the price side, we need to be able to iterate quickly. Probably some of the biggest pains I've had over the 27 years is being able to react to market conditions and react to our own loss trends and our own data. And we seem, I think we're at a point, especially at Hippo, where we can iterate rates quickly. We can introduce new rating algorithms where we're basically working quicker than the insurance departments can approve them, but we can get a lot done in a shorter period of time than what we used to be able to do in legacy tech stacks. Second, our ease of doing business. As Ben was talking about, third-party data it's revolutionary right now. With just a name and an address, we can provide you a quote in 60 seconds. We can bind a policy in 5 minutes. It used to be several days, right? So we've gotten to the point where we can leverage third-party data in such a way through APIs that we're working faster than we've ever been able to before. It's changed the entire expectation of our customer base. And third, can we provide value? Like, can we provide something that's different? And for us, it's really our smart home, using smart home technology to help clients mitigate against loss, first and foremost. Trying to shift the paradigm from indemnification to mitigation, right? At the end of the day, our policy is a backstop. If we fail at helping you avoid your loss, that's the best. That's the goal. But if we fail at that, we got the policy in the background. So I think the technology is helping us kind of support this profitable growth message throughout all aspects of the value chain for us.
And Dean, what are your thoughts on the tangibility of some of these attempts to improve the underwriter?
Yeah, I think that the most obvious, to me, answer to your question, Michael, it has to come around speed. Right. I mean, what has been the development over the past? I mean, I've been underwriting almost 35 years, and back in the day, I could handle X amount of accounts, and I could move those accounts. The information that moved at a snail's pace. Right. You would wait for this. Ben had indicated something where you send something down for modeling or whatever, and you wait a week and you come back, and I mean. The speed has increased by orders of magnitude. So the speed of information. Now, has that made people more efficient? You could argue that it has. I could certainly process with the speed of information. I could process a lot more accounts, whether they be simple or whether they be complex. I think the number of accounts that I can process, thanks to the speed of information, has gone up. Now, that starts to open up other questions. That starts to open up other doors. And say, am I really more efficient, or has it really improved my decision making, or has this, rapid stream of inputs, which is by far outstripping the amount of output that an underwriter has. Their inputs, when you go on the web, my God, you can get 50 streams of input to what is going to be your ultimate decision, your binary decision to insure or not to insure. I could have 50 stream of inputs, whereas 30 years ago I might have had 3. And so it is my decision making. What value am I going to place on these various streams of input to make what is supposed to be an outperforming decision that outperforms the market, something that makes you a good risk taker? That's the people side of the business. So the obvious answer to your question is speed. I can move things quicker, but really where I spend a lot of my time is does quicker always mean more efficient and better? That's the part that we need to dig into a little bit further.
I appreciate that perspective. Chris, let me bring this one to you first. Because you actually brought up some element of competition. And my next question is really around how changes in automation may or may not be manipulating the framework of how underwriting companies compete. I'm curious for your perspective on that.
Yeah, I think it gets down to the speed and the ease of doing business. If we are able to provide a quicker, faster, more accurate experience for the client, and to Dean's point, he's kind of bringing together speed and quality, right? Again, is there a trade-off there? And I think the technology allows us to mitigate the danger of that trade-off. So if we go back to the example of using third-party data in our quoting, it's a win-win, right? So it on one hand, it allows the client to get a quick and accurate quote. Oftentimes in our world, a client they bought the house 5 years ago. They don't know when the roof was last replaced. We can provide third-party data that helps that gap, that helps them get to a quote quicker without them having to do the research. On the other hand, for us, it allows us to get a proper rating. We know what the risk looks like so that we can get to a proper rate. The other side of it is just value, right? So are our clients able to get to the right coverage limit? And I think we're to the point where the data and the technology are such that it supports both the client and the insurer get to the right answer quicker, and oftentimes it's a better answer, especially in our business.
Ben, your thoughts?
Yeah, I think there's an old there's a truism here in that you can only go as fast as the slowest component within your systems, right? Because I think, and to the points that Chris and Dean have made, speed, you can speed up an individual part of your system, but you might find that the bottleneck just hits elsewhere. And I think, my take on that really is that, we quite often engage with organizations where underwriters don't really spend too much time underwriting. I think McKinsey quoted it recently as like 30 to 40%. I think anecdotally, I'd suggest it's a lot higher than that. It's probably around about 80% of their time, just actually trying to track their work, key into different systems, trying to chase their tail, work out where the documents are. There's a whole raft of activity that happens off the side of a desk just to try and manage that through. And the frictional cost of that, of course, is very big, actually. And I think in the context of that, you look at changes within that underwriting process can be anything, quite staggering. I think, Deloitte said something, it was around between 12 and 16 months. And so we come into that environment wanting an understanding that you need to start to make all of the cogs turn a bit faster. So speed of one component is not going to be enough. So what you need to be able to do is turbocharge that whole capability. So that kind of submission to bind process, you need to remove all of the friction within there, and that will start to deliver the benefits that you get. And so you then start to be able to understand how you can be competitive, not just with new products to market, but also reacting to market change, being able to update, modify your underwriting process to capitalize on opportunities that you see within the market. And we see that often. We've got MGAs that we work with who want to turn that on its head and want to go live with new products in 90 days. And that's a real different sea. It's a sea change to that traditional way of trying to manage it all through in manual processes, where you have to kind of cope with a bit of a Frankenstein's monster of systems that have been cobbled together, right? So.
Mm-hmm. And Dean, how do you see the competitive landscape? Is it changing, or is it really more or less the same?
I love Ben's points and some of the statistics that he's quoted, and I often joke that I see underwriters chasing technology, and it's like a dog chasing a car. It's like, what are you going to do when you catch it? Right? And so there's a lot of time spent working on this technology or that technology, and probably not enough time spent on what am I going to do with it when I catch it. The competitive landscape, do I see others starting to benefit from technology? Absolutely, I do. The development of technology, it's still very much proprietary. I see a lot of in-house development, and there's insurance companies generally have good sized payrolls where they can bring some of this expertise on board, and we have noticed a better efficiency as a result of those who use technology well. And I'm amazed at how much is still proprietary and how much is still proprietary systems out there for that technology build. Even here at Berkshire, a lot of what we've done is proprietary build in terms of the technology that we use, and we think it's made us better. We're always questioning that, of course, but we think we've made us better. And if we make ourselves better, then ultimately we're going to get a better product to the customer. And we're going to do that more efficiently. We're going to be able to process more customers efficiently and grow our business. And so I see it. It's last point on this issue is that I have seen a tremendous amount of capital efficiency and in the marketplace where technology has been a leveler. For a lot of the back in the day when you were pricing catastrophe risk, it was much more rudimentary. Well, the introduction of modeled risk and modeled output has been a bit of a leveler for everybody, and it's made the equivalent of a bid-ask spread to be tighter, right? The variance in the market offers are a bit tighter and therefore more efficient, and it just makes it more difficult. You can't capitalize on any edge there that is driven by inefficiency. The market has become tremendously more efficient and therefore more competitive, and you really have to do something different to differentiate yourself.
Chris, I'll come back to you again on this one to kick us off, especially in your seat as well as Dean's as a chief underwriting officer. Curious how comfortable you might be in sharing with us how you're driving the underwriters that are under your management to capitalize on this evolving landscape and the opportunity to learn about these digital tools that can potentially in some ways fundamentally shift their personal success as an underwriter. How do you see their individual opportunity to outperform their colleagues, and what do they need to understand about leveraging technology in order to drive their career?
Yeah, I think what the skill set that we're requiring underwriters to have today has shifted a little bit. It used to be, when I started, in the mid 90s, we were looking at, our job was individual risk underwriting. We looked at individual risk. We made individual decisions in a silo, in isolation. And we didn't speak a lot about how did it improve our portfolio. We didn't zoom back out and look at things from a 30,000 foot level. What I hope I'm doing with our underwriters is creating more perspective in how do you build a resilient, strong book of business that is aligned with your value proposition, that's aligned with what you're trying to do. At Hippo, we're looking to find clients that are aligned with our risk mitigation strategy, that are interested in risk mitigation and using smart home technology to do so. And those are our clients. Those are the people that we're out marketing for. Of course, if other clients come to us, we're an agency, we can find other places to fulfill their insurance needs. But with the Hippo product, we're looking for clients that are aligned with that. And what I want my underwriters thinking about is when they see a client, they say, okay, does this client add to our portfolio in a positive way? And can we grow our book of business in a profitable way with this type of client? And I want them to take a 30,000 foot view and say, what does my portfolio look like? So that's on the customer side. We also look at it on the geographic side. Are we diversified geographically? Have we built a resilient portfolio that's not going to be taking cat hits, that is diversified into states where there's a favorable insurance market? I want our underwriters thinking about that when they're thinking about individual risks, so that there's a better perspective on what we look at. And I think that's really changed what our expectation of underwriters is. And we can use the technology underlying all of this, but this is where the human element is really important as we make decisions.
Dean, I want to stick with the chief underwriting officer perspective here. How are you pushing your team, and how do you see their opportunity to compete potentially changing?
Yeah, the analogy I use for career advancement in the underwriting space is, if you look at the executives from the 1960s and 70s, and even early 80s, they didn't know how to type. They didn't need to know how to type. So, they had people that specialized in that. And now you look at the executives, and everyone I know is carrying around, communicating on their iPhones, and they're a lot more tech savvy. In fact, when I was an underwriter in the London market, it was actually a status symbol if you did not have a computer on your desk. Right? I mean, because that was not necessary. So there's been an evolution of having to understand have a working knowledge of so many different aspects of the business. So when I'm coaching underwriters, we're coaching underwriters in natural catastrophe and data science and weather patterns and probabilistic modeling and risk control and like I said, actuarial sciences and all different parts of it, claims, which is the people part of it, interpreting language and that sort of thing. So, I think the way for the underwriters to advance their career now is to have a working knowledge of so many different sectors rather than just being the specialist who does X. You need to have a broader picture. The technology has allowed you to maybe have that opportunity to get involved in the broader picture of all the things, all the components of decision making. And to the extent that you can build that skill set and have that touch capability, I came from the loss control, the risk control side many years ago, and the broader experience you can have with all aspects of the insurance process, I think the better off you're going to be in your career.
And Ben, although you're not managing underwriters, you certainly work extremely close with them. And I'm sure you have a pretty strong opinion on how, on the strengths of that an underwriter will gain working with exceptional technology versus working potentially with little to at least legacy technology, and what the impact might be on their career if they are learning and adopting these newer technology options. What are your thoughts on how that might improve the trajectory of their career?
Yeah, I think careers are a funny thing, right? But I think the one thing that I will say is that the one constant, really, rather strangely, is change in all of that, right? So the way that the market looks now and the technology you deal with as an organization probably won't be the same, or rather it shouldn't be the same in 4 or 5 years' time, because what you want to be able to do is adopt the latest, greatest technology with minimal effort so that you can capitalize on the advantage that it gives you. And I think this is one of the areas where we hone in on quite specifically in our underwriting workbench, is that it's built for change. And I think, the idea that you go as an underwriter and you're locked into a specific way of doing something, I think is quite anomalous with the way that the overall market needs to modernize and really needs to develop. Because I think, I'm not unusual, and I'm sure we're not all unusual in the respect that we want our careers to develop. We want to do new things. We continually want to improve ourselves. And actually having the right tools and capability means that you start to focus on the things that are really, really important to you. I don't think, people go into that choice of underwriting, spending a lot of years shadowing someone going through that process, to then have to work out how they manipulate data on shared drives for 4 hours a day just to work out what they're doing. I mean, it doesn't make any sense. So that kind of built for change style is front and center for us. And I think probably the other thing is that there's a set of tools which are prevalent in the marketplace, which tend to be hit with a hammer just to make them suitable for that underwriting journey. And typically you kind of get like a sort of I guess a set of applications which they might be CRM related, or they're kind of built for one thing, but they can, with a little bit of massaging and a hammer of various different sizing, you can get them to do or play ball in certain different areas. Now, I think we're quite unusual in that our underwriting workbench was built specifically for that underwriting journey. It's built around underwriters. It's built around the challenges that they face in that frictional cost arena of submission to bind. But typically, these are the guys that we want to speak to as an organisation. They're front and centre for us, and trying to get time with underwriters and chief underwriting officers is absolutely paramount for us, because what we've done and what we strive to do is always develop that in a partnership, so that the people who are actually using it, and I know this sounds like really sensible stuff, but the people who are actually using it are the guys who've helped shape the product, and that, I don't think you should underestimate that, really, because it is a bit of a paradigm shift in, well, here's the product, what do you want it to do? It's not that. It's built from the ground up to actually satisfy the needs of the trials and tribulations that you go through in trying to get through that pre-bind space.
Mm-hmm. Yeah, I appreciate that perspective. You mentioned, Ben, the idea that an underwriter should be ready to adopt the latest and greatest technology, and that might come around. And I know you probably pulled that out on a whim, but every 4 or 5 years. And it actually is a interesting segue that, Dean, I'll have you kick off on around how fast are expectations around what underwriters are capable of, or even on what technologies they should be using. Are the expectations around how fast those things are changing fair? Or is there maybe an unnecessary pressure that what underwriters should be capable of, or what technologies they should be using? Is there an unfair expectation that those should be changing faster than they should be?
I don't know if unfair is the right word for it. I mean, there is a pressure to, as the markets become more efficient and more competitive, and those that are going to outperform, are going to have to differentiate themselves, usually through their people, which is the biggest investment insurance company make is the quality and of the people that they hire. And I don't think there's any problem with holding that quality to an exceptionally high standard. We like to believe we have a high standard of capability that we bring into the organization. Character is probably even more important, but we definitely have a very high standard for capability. And so I don't think it's an unfair standard. I think it's a challenging standard. And I think, if you talk to younger people, and I include my children in this, they like to be challenged. They don't like the easy route. They're not asking for the easy route. They're asking to be challenged, and you can probably push that envelope at one point to it feeling a bit unfair. We're in a very global market here, and the hours sometimes can be very demanding, and the adaptation to technology that we're trying out, could require quite an effort on behalf of those people. But I wouldn't use unfair. I would say we have to be aware if it's getting unfair, but in the meantime, I do think we have to challenge the new generation of underwriters that are coming in to really have those exceptional skills and differentiate themselves in order to advance in their careers.
Yeah, back to you, Ben, in terms of both Sen's own evolution and advancement and the speed with which your technology is improving, as well as how you see the landscape around underwriters as an industry. How fast are things changing, and what do you think the expectation should be of underwriters, and how fast they should be expecting to adopt new capabilities, new technologies?
Yeah, I think I look at this in a slightly different way, because I think technology is a means to an end, right? So if you don't want to just jump on, we've all got the buzzwords in technology, and doing something for the sake of it, I don't think is sensible in any manner. And what I always try and get to the bottom of, really, with all of this, is what's the business benefit out of segueing into a new technology? What's the business benefit that you get from that new data source? What's the business benefit you get from presentation of data in a different way? And if you boil it down to that, then actually the technology sort of falls into the background to a certain extent, because I think if you make the pathway to the adoption of technology easy, which is what we strive to do, then actually the output is what you're interested in. As a business, what you want to know is the data's in better shape, it's much more accurate, I can get my hands on it faster, and I can get to the relevant information much more quickly. And if you can get to that point, really, and as an organization, you can abstract yourself from whether it's running on cloud-based services or this or that or the other. What you're interested in is it's reliable, and is the barrier to adoption too high for me as an organization to accept? Because what you really want to be able to do is say, that new data source over there that's going to give me a competitive advantage, I just want to be able to slot that in, and I want my underwriters not to worry about the fact that it's running on a different technology or a different cloud provider. So I think I just view it in a slightly different way, where that transition should just be easily adoptable, and whether it's 1, 3, 5, 7, 9 years, I think that's down to the business appetite and what their portfolio growth initiatives will be, and where they really want to concentrate their objectives. Because as with anything, you can go hard and fast on one particular line, one particular opportunity, or you can go smooth and steady across a number of different opportunities. So, and there are strategic elements within all of this. It's not just you don't just go for one thing. You might have strategic capability across your organization you want to leverage a little bit more. So there's lots of different reasons that you might decide on technology, but really it all boils down to the business benefit for me, and it's why we've striven so much to ensure that adoption is that it's the easiest path to adoption, because that means people start to use it.
Yeah, Ben, I love the way I love the way you reframe the questions. You do it in a very elegant. You do it in such an elegant way. It really is a masterclass in how to answer a question. Chris, in terms of the speed with which you see change coming at your underwriting team, at underwriters in general, how fast is it happening, and how are they keeping up?
It's funny. I was listening to you and I'm thinking, am I keeping up? So I started with an Insurtech a year and a half ago, and my history has been with some blue blood insurers, traditional insurers, and I saw it when I came in. Am I moving fast enough to keep up with the change? Because I see my role as setting the pace, and if I'm not keeping up, so I found myself reading. It was a challenge, right? And I think it's a challenge for all of us throughout our careers. This is just an example. How do we keep up with what's going on out there? I love Ben's point around technology hasn't reinvented insurance. Insurance is still insurance. There's basic blocking and tackling and fundamentals about how we execute it. The technology and the change is how we execute it. And if we can execute it fast and efficiently and in a way that's beneficial to the client, while also supporting our profitable growth goals, right? And so, if we are able to, and that's incumbent upon us to adapt to those situations, adapt to new technologies, adapt to a changing marketplace, adapt to new ways in which we interact with our clients. And I think what was really interesting coming into Hippo was, meeting up with product managers. And I think from the insurance side, I always think of a product manager as somebody with a line of business in a state, and they manage the products in those states. Where product manager at a tech company manages a tech product, and they come at it with a customer experience preference. Like, how do we deliver the product, the insurance product, in such a way that's beneficial to the client and to us? And I think that's a perspective that I had not seen at other companies. So I think the idea of bringing tech and insurance together is really the thing that's kind of going to push us forward. But I think from a skill set, it was really important for me to think about, how do I fit into this, and how do I have to change in order to fit into this new organization, how we're adopting technology in support of underwriting results.
Yeah, appreciate that. I want to change the format a bit and open it up. So whoever wants to raise their hand or just jump right in on the next question, I'm curious about some specificity, if I can challenge the three of you. And it's hard to maybe sometimes define where one emerging tool from an underwriting perspective kind of starts and ends. Data, for example, really is touching so many different elements. It's coming out of IoT, it's coming out of third-party data. So just saying data could be a bit amorphous. It's a bit obtuse. But if you could, to the best of your ability, on the spot, is there a specific emerging tool, or maybe a handful of emerging tool suites that you're particularly excited about? Something that really rises at the top, Chris.
Yeah, I think, go back to a point from earlier in the discussion, third-party data. I agree with you. There's first-party data, there's third-party data, there's loss experience, there's customer. I mean, data is just a huge concept. But third-party data, the availability of data and data providers that are out there, the efficient, the ability to take in that data, find where it works for you in your processes. The ability to bring it into your environment easy, to house it, to manage it over time. There's a lot of detail in there it's hard. It's not easy to do. And the abundance of data out there, not all of it's going to be worth something to each of us, and it's going to be worth something different to each company that's looking at it. But I think there is a huge opportunity there. And those that handle that data well will find insights in their business, not just, and I think we have a tendency to think actuarially about losses and about premiums, but also about how we treat customers, what makes them retain with us, how do we maximize lifetime value of those clients, how do people engage with us. There's an enormous opportunity to use that third-party data in our business, bring it in, as Ben said earlier, at all different points in the process. To improve our business. Those that win the data wars will win competitively in the marketplace.
Appreciate that. Dean or Ben, is there an emerging tool in addition to third-party data that you're just in love with?
In terms of individual tools, I nothing jumps to mind because there's many of them out there. I will say that from a data perspective, I really like to focus on data that is actually predictive in nature. I think too much of our industry is focused in on gathering data with the underlying assumption that the past is going to, the future is going to look somewhat like the past. And if there's anything that, COVID and, Arab Springs and, all war in Ukraine, if there's anything that has taught us is that, you are hit with new risks all the time, where the data that you've chased down for so long was really not all that predictive of what's going to be. And that, as an underwriter's job, is to get out the foggy crystal ball and have a look into the future, which is an onerous task. So I like to focus on things that are predictive. I really like the predictive modeling, or I should say the probabilistic modeling that's happened. It used to be with hurricane or earthquake risks, that you would look at the past and say that is somewhat predictive of the future. It's really, really not. If you really dig into it. The thing that is predictive is when you take a data set and you build it to 10,000 entries and you run probabilistic data on what could happen. That's a probabilistic forward-looking view. And that 10,000 data set point that was, yes, it wasn't based on history, but it was something that was pieced together. That's extremely useful when you get into the use of probabilistic data as opposed to historical data. Similar thing if you're chasing down whether a building is made of this material or that material. You don't know if that data is necessarily predictive in making a rate decision. You would think, wood burns, and therefore the rate should be a little bit higher than it should be for metal. That's intuitive, but has it really been proven, that's going to perform better or not? So I like what I'm seeing in terms of predictive modeling, probabilistic modeling. that's coming out, and it's very forward-looking in what could happen as opposed to what did happen in the past.
Ben, just for fun, humor me. Give me a tool because you've got a baby with a lot of different capabilities, but give me one.
We have. I think that there are probably too many to name individual ones, but I think what I'd like to make the point is that traditionally, right, money's almost universally been invested in what we'd call the post-bind space. So it's like the policy admin systems, the finance systems, and what you're seeing now is investment into the pre-bind space. So all the bits that Dean's just talked about, the modelling, all of that capability. I think what you're going to see, and this is a combination of data meets antiquated software at the moment, where you'll throw all those big data sets at the old software, and it will just say, well, I can't deal with that, and so you're going to have a new wave of entrants into the market that start to be able to take that data, come up with new ways of using it, modeling it, extrapolating that data to provide some really innovative solutions. So I think you're going to expect a lot of change. I mean, we've got some guys that we prefer to work with, who are at the front of that change side. But I think it's going to be a really, really exciting space over the next few years.
Definitely. We have about 8 minutes left in today's session. So I want to turn the focus to a personal perspective. Chris and Dean, we'll start with you from a chief underwriting officer point of view. Dean, I'll point this in your direction. What are your personal challenges as a manager, as a leader, with technology shifting around you, and where it can possibly go from here? What are your personal challenges as a COO?
Yeah, I think Chris touched on it a little bit earlier. Is like, am I doing enough? Right? I mean, I guess I put myself into the dinosaur category. Remembering when we did catastrophic evaluations with push pins on maps, and so there's a certain amount of keeping your own skill set current. And I'm fortunate to be surrounded by a lot of smart people here that have educated me in so many different ways in terms of developing risk and developing technology. The easy thing would have been for me to sit back and say, you know what, that's you handle that, and I'm just going to do my CUO thing here. The difficult part is to really engage and make yourself vulnerable, to say, hey, teach this to me. When I go to my 20-year-old and I say, hey, teach this to me, they look at me and they're like, Dad, you're supposed to know this. And, the reality is I don't. And making yourself vulnerable to the point where you can say, hey, I need somebody to teach me this so that I can, effectively lead it, and I can effectively make decisions around what we're going to do in that space. That's critical. In any CUO job, you have to realize that you can learn so much from the people around you if you're open enough and vulnerable enough to say that I don't know everything, but I can learn, and I'm always learning. So even at my age, I'm happy to say that I'm still being educated on a daily basis. But it's a struggle to take that mindset every day. It's a challenge every day.
Yeah, no, I appreciate that one, and it's well put. Chris, what are your personal challenges?
I love what Dean just said. I mean, the humility that it takes to be able to adapt in the world. My father used to tell me, nobody ever learned anything by talking, right? So I taken that with me and try to listen to people with different experiences. I think in addition to that, it's finding a balance between innovation and blocking and tackling. It would have been very easy for me to walk into this current job and say, okay, we're going to do it the way that I did it at Chubb. Because Chubb's been a really successful company. I learned a ton from them. Let's just do exactly what they did. And it would have been really easy to do that, quite frankly. But we realized, when I came in, I realized we're going to do things differently, and we're going to adapt to the new marketplace, and we're just going to do things differently. So half of my time, I have to be very disciplined. Half of my time is spent thinking about the future and thinking about different The other half of the time is spent thinking, okay, how do we execute? I know how to execute. We've been doing this a long time. It's well established. This is what we've got to do. But how do you think both at the same time? And it's not easy. I used to say about profitability and profitable growth is the goal. You tell me how to grow, I can grow. You tell me how to run a profit, I can run a profit. It gets a lot more complicated when you try to do both at the same time. This is a bit of the same, right? Is how do we innovate and push forward while we still maintain underwriting discipline and build a profitable, disciplined portfolio.
I appreciate that. And Ben, very curious from a CEO perspective of a technology company, what are your personal challenges?
Yeah, I think I'll agree vehemently with both Dean and Chris here, really, because I think if you go into it thinking you know everything, you're going to come unstuck pretty quickly. I think we really go well. I mean, we really try to work very, very closely with businesses because we know we don't have all the answers. So we've got a lot of the answers, but I think to assume that it's my way or the highway side of things, it just doesn't work for us. So we always look to create partnerships where actually there is a two-way dialogue. I mean, Chris's point about listening is 100% right, because I think it's too easy to get a little bit sidetracked into we did this at the last place and it worked fine, so we'll carry on with that. I think there's a perspective that you get when you start to actually listen to the organizations you work with, where you really start to understand what's driving the decisions they're making in the business, and you really can't underestimate how powerful that is, and it's a message that you need to listen to. As a technology company, we work with some of the biggest vendors and some really great people, and again, quite often they've got a lot to bring to the party. What you don't want to do is just assume that everything you've got now is the right solution, because it's not that you build it right the first time and that's it, your job's done. You continually innovate, you continually look for new ideas, you continually start to push what is on the bounds of your known knowledge pool at that point, and you continually improve. And I think it's great for organizations to recognize that, and there's nothing wrong with as a technology company saying, wow, that's brilliant, I think we're going to adopt some of that, and can we take some of those ideas and run with them, and can we help you deliver some of that capability that we know is going to be fantastic.
Yeah, absolutely. Thank you, and that was a great perspective to close us out. Chris, Dean, and Ben, a lot of firepower on this panel today. Very much appreciate your perspective and for sharing some depth into your perspective, not only on where we are as an underwriting industry today, but where this industry can go. With that, I'll close this out. Thank you all for listening. I appreciate your time.
Thanks, Michael.
Thank you.